veering to one stock, Raymond. That stock is in focus after the company presented a resolution at its AGM to make an offer selling premium real estate to its promoters at what a proxy investor firm calls throwaway prices. The proxy investor firm in question is the Institutional Investor Advisory Services, IIAS. They have recommended that shareholders should vote against this resolution. Amit Tandon, Managing Director of IIAS and the author of the report, is with us. Amit, good morning. Thank you very much for joining us. Take us through the math. What should be the price of the flats? Okay, the reference is to JK House building, which is quite familiar for those of us who live in Mumbai, in APNC Road. There are duplex flats, 8 duplex flats in that building. It's being transferred at something like 9,200 rupees per square foot.
That's right.
What's your arithmetic of what it should cost?
Well, it's clear, if today you and I were to buy apartments for 9,200 rupees, we would be pushed to Navi Mumbai, and there we would be struggling to get premium property in Navi Mumbai. Here, this is Bhula Bhai Desai. This is opposite the Breach Candy Club. It's as prime property can be. As per a JLL report, which our analysts have viewed, the value is upwards of 1,15,000 rupees a square foot. As against that, 4 members of the promoter family are being allowed to buy these houses for 9,200 rupees a square foot. So it is egregious, to say the very least. And when you said that we've recommended shareholders vote against it, that's putting it mildly. We've kind of pretty strongly asked them to vote against this transaction.
Okay. So, you've also mentioned that this leads credence to the fact that promoters are using the company to support their lavish lifestyle. I mean, that's a tall allegation. But what more have you sort of picked up on this?
Well, if you just look at the numbers, first is this property before development was used by the promoters. They were paying a rent of 1 rupee or 2 rupees a square foot. Again, if you look at the company's balance sheet, you'll find that they own yachts and aircrafts. So all this is giving us credence, giving credence to the view that, look, the company is, some of the cash flow is being used for dissipated away. I kind of look at it.
I have 2 questions on this. One, you refer to this 1 rupee rent. There are a bunch of people I know in Matunga, my neighborhood, where people pay 88 rupees for a real good house. And, Matunga is as prime as it comes because these are old tenants. And when I read through your report, some of these old tenants cannot be dislodged because of the tenancy rights. And is there, some legal problem in having to charge these guys more? And secondly, what did the company tell you? I'm sure you wrote to them.
Look, coming back to the first question in terms of the legal rights, of course there are legal rights, but here is the property which belongs to the company and it's occupied by the family of the controlling shareholder. So the relationship between someone in Matunga who's rented a property versus this case is old Pagdi flats versus this is completely different. The flats are owned by the company. The company can say that, okay, we've hired a property for our managing director to use, in which case they can say it's an old agreement and the company paying itself really doesn't matter. But this doesn't really kind of add up completely, and therefore I don't kind of buy the argument. The company has also said that this is one of the reasons why they're selling it at such a throwaway price. But again, that does not.
Why did they say they're selling?
Well, they said that it's been tenanted by the various people of the Singhania family, and therefore, we understand that, and therefore we are selling it to them at below the market price. Just by way of history, the transaction was first struck in somewhere in 2007, 2008. Even at that time, the property prices were about, in that area, would have been about 30, 35, 40,000 rupees a square foot. And then they decided to sell it at 9,200 rupees, stating that these people are there as tenants, and therefore we are giving them this
throwaway price.
At this throwaway price. But clearly that should not be the case, because look, the property is available to the company. Whoever is there as the CEO should be allowed to stay in it, and if the family is there, fine. They need to move out. And the company was not tough in their negotiations, because the agreement with the promoters ran through to 2011. They could have well said that, look, once you vacate, then let's take it. And I'm sure they would not have litigated against each other, just given the relationship which is there between the two of them.
Amit, very quickly, the 650 crore translates actually in terms of 100 rupees per share.
Absolutely.
So it's very significant for minority shareholders.
Absolutely.
Given the procedural voting pattern, do the minority shareholders have the might to annul this transaction, given the promoter holding is closer to 45%?
Absolutely. First, look at the number which you pointed out. It's about 100 rupees per share. As against that, the current EPS of the company is about 4 rupees 12 or 4 rupees 25 paisa, or in that ballpark. So you're talking about something which is more than 20 times the EPS. That's the impact which this transaction has. The second is, just given the nature of the transaction, I will not get into the broad details, but very roughly, the company had the option of, the agreement with the promoters was that when the property is completed, they will make them an offer, and which will be accepted. Now, once the property was supposed to have been completed in about 2010-11, it got completed in 2016, and the company did not make them an offer, at which point 3 of the 4, Mr. Vijaypat Singhania, Akshaypat Singhania and Veena Devi Singhania, actually exercised the option and then gone into court litigating against the company, saying that this property needs to be offered to us. So the company is approached the shareholders saying we're going to be offering the property to these people, and now that the related party rules have kicked in, they are kind of obliged to come to minority shareholders. Otherwise, they would not have come to minority shareholders, because the disclosures in the annual report have been a little bit underwhelming in this matter. So now the shareholders have an option to vote against. They should actually exercise their vote and say we will not vote against. If the shareholders don't permit the company to put this asset on sale to the promoters, the company cannot do so.
Yeah, it's of course majority of the minority.
Absolutely. It's majority of minority, and we have to thank SEBI for that, because they have more stringent rules.
Yeah, Amit, out of time.
This.
Thank you very much for dropping by and explaining that to us. We have to take a very quick break.